Okay, so we're in a cell that looks like we're probably going to smash through in just a couple candles, which will be nice. Obviously, here's our entry, that little triangle. There's our stop loss. We're going here for our take profit. We did have one loss right here earlier that looked like it was going to be nice, and then reversed, and that wasn't quite as fun. And we had another trade earlier in the day. Did it show up? Yes. Which we got into a good entry, and then right here was 920. So I closed at the end of the 920 candle, which was actually there. So I closed it right after. And that trade would have gone all the way to take profit. You know, the stop loss was up here, take profit was down here. So it would have been a nice trade if I'd kept it open through the open, but I don't like to do that. It just becomes so volatile, and your hit rate becomes much lower with the volatility of the open. So look at our trade here. We're going back to entry point. Never fun. We were halfway to our take profit. Seems like a little bit of indecision on the Forex market's part at the moment. So if I get any say in what the market does, I'm voting for go down. Give me red candles. Red, 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 red. But that's the nice thing about having a mechanical strategy. You enter your trade and you just don't touch it, and you see what happens. This is where your back testing is so critical, because you need to have a good amount of data to be relying on in the moment, in the middle of a trade. And then you're not relying on your emotions or your fear, or, you know, if your left knee is starting to twitch or some silly kind of superstition. You're not rubbing your lucky rabbit's foot, hoping for the market to give you what you're craving. Instead, you just continually play your system. And your back testing shows you during a certain window and on a certain instrument with a certain take profit and whatever. You have your filters in place, and then you know that you can rely on those numbers to not to give you a win every single trade, but to give you profitability over a period of time. So we can see as well, if we scroll way back, let's see what price is done here. Oh, we can't really see anything on this chart. But if I had to guess, we've probably recently swept. There probably was a previous high rate here, somewhere in here, that we've now swept. And now we're tanking to go to the other side. So that's what we're hoping for anyway. Let's see what happens. We've got 4 accounts connected to this, except one of the accounts, I'm doubling the size of the trade that's being copied into that account. So the challenge is up on that one in a few days. So I thought, well, we might as well blow the challenge or pass it and just speed up the process. That's why you can see I'm in 4 contracts for a sell, and you can see it's a total of 20 contracts. And we're getting close. The really annoying thing sometimes is to just leave it to do its thing, to not try and think for the system and not try and intervene. And generally, if you do that, you will just mess up your results. Better to have your backtesting be very pure and mechanical, and then have your trade entry and your trading sessions be very pure and mechanical. You should be basically learn how to backtest this really well across a number of months, and then learn how to condition yourself to trade during your trading session exactly like you do your backtesting. Now, obviously, that's how you're going to get the results in real time that you get during your backtesting. Not gonna lie, it's uncomfortable when you see your trade start to reverse and go back to entry point. I did have a rule in place that I tested for a while, or a variable in place, which was if price gave you 1R, so basically this is 1R from entry to stop loss, and if it gave you that 1R, same distance from entry to take profit, which would be somewhere probably about here, And I had a rule that if it crossed this line, I would break the trade even. So I would move my stop loss from here down to the entry point. So if price came down here, crossed 1R and then reversed, it would hit my stop loss and cash out the trade at 0. I actually found over time that you lost more money that way than the losses that you prevented. It was marginal, but it's something you guys could test in your back testing if you're interested. I think we've got about 20-30 minutes left in this session. There's a possibility we could get one more trade after this. But if I had to guess, I would say that we're definitely, we're going to, whether price hits, does one more sweep and then drops, that's the question. But probably we're going to want to come down, price is going to want to come down and take the liquidity that's sitting down here at the very least. If not, I would be expecting that it's going to want to come down and take the liquidity sitting down here. It's just been sitting there this whole time. It cleared away all that liquidity there, did a little run up, and now it would make sense it comes back down and sweeps that. But whether that does that right now, or whether it sweeps one more time and then does that, or 2 more times, or maybe does that in the afternoon. But that would be kind of my offhanded guess of where things are going. Nice thing about a mechanical strategy is you just do what you do.
Order filled.
I love that. I wasn't even paying attention. Make sure when you do this that if you do have, if you are using Tradebait and using the copier for your trade entry, that you always hit exit as soon as you're out of the trade. Otherwise, you'll have your other side, your stop loss will still be sitting here active, and price can reverse, trigger your stop loss, and then you're in a trade that you hadn't intended. So I always hit that like 20 times. But that was a nice little trade. Okay, so that puts us up for the day. About $250 in each account and $500 in one of the accounts. Nothing wrong with that. So there you go. That's a bit of an idea how Sniper works as you're going through the session. And if we get lucky, we might have another sweep and another entry here. So let's see what happens. We got one more entry. You can see right here we had, that was a little high right there, short-term high. Came back down, swept the short-term high. So you could have put your chuck here. This would have been your sweep, obviously, the line right here. Then you could have put your chuck here if you're going to kind of the extreme, or you could have put it here because this actually swept a little short-term high right here. That created a little high, came down, and then swept it. So you could consider the sweep to have been off of that, in which case you would have used this, or off of this, in which case you would have used this. That was the first sweep. Then it went up, came back down, went back up, and at this point, right there was a second sweep, and this was your second chuck, right underneath that blue candle. So this is what I entered off. You can see right there is my entry. Price came down, crossed it. Now it looks like we're probably just going to go right to the smash. But the really interesting thing is to always remain attentive, because this was, for now, my trading session ends at 11 o'clock because of my back testing. And you can see this is the 11 o'clock candle. So I was probably this entered 30 seconds before the end of my trading session. And it may be the setup that just puts me nice and over the top for the day. So we will see probably in the next couple of minutes if we're going to smash that take profit. If I had to guess, I mean, there are a couple, minis there or whatever, but it looks like price probably wants to come down and take liquidity from right here. So that's looking like a pretty good trade to be in, because I would, even if the price does reverse and in the afternoon session starts going back up, which personally I think might be a little bit doubtful, but even if that does happen, it's pretty probable that we're going to sweep the liquidity from here first and then work our way back up. So I'm not sure why that didn't cash me out, but let's just cash out.
Order filled.
That's weird. I think I got some major slippage there. Wow, that's really interesting. I'll show you the other screen on trading. Really interesting, because we entered, you can see we entered right at the mark, dropped right down, went all the way down to here. It didn't engage my my take profit. This would have been my take profit right here, which should have smashed. So then I manually closed it right after. And when I manually closed it, it was already all the way back up here. So that's a little bit bizarre. There was a delay in the system. So I think maybe there was a connection issue, or maybe that was just a slippage issue in the moment. I haven't seen that before on trading futures. So sometimes happens, but that was still a good 1 to 2 trade. So up nicely for the day. We've got 4 accounts trading, made $500 in 3 of the accounts and $1,000 in 1 of the accounts. So definitely a nice day for trading and a good way to go into the weekend. Well, Forex isn't always extremely predictable, but it is sometimes very predictable. And so you can see, just like I said at the tail end of the last video, the liquidity sitting here, they were definitely sweeping that before heading up. We could see price even come down and take whatever liquidity is sitting here. Don't know how long that's been sitting there at a low. See how far back it can go. So we could see price even come back into this area, and then probably it's going to have, it could even come down to here. Probably it's going to get what it wants. Let's say maybe here, and then reverse, or maybe somewhere in here, and then reverse and head back up. But that's just a guess. And like I say, with the mechanical strategy, you don't really need to know what's going to happen in advance. It's just kind of a interesting skill to start developing. Watch price, how it moves, try and predict where it's going. Maybe today I should have kept the trading session open a little later. Look, you can see there was our nice trade. Finished the last video right around here saying probably we're going to sweep this liquidity sitting right here, and we might even go to the next liquidity, which was zoom right out. That's going back. What is that? Oh, that's just yesterday. Looks so much farther on the 1 minute. But at any rate, we thought we're probably going to take at least this here or come all the way down to here. Now, I would say it's anybody's guess. At this point, we could come down and take the next liquidity, or we could start a nice reversal and heading our way back up. But you can clearly see this is not random. This is not just for play. This is literally the banks set this up so people will put their stop losses exactly where they want them, and then they just go and raid them. So it'd be interesting to see if this becomes a buy in the afternoon and price starts heading back up and it's just basically smashed all those stop losses. But yeah, don't get caught in that. Have a nice mechanical strategy. You can see if I'd kept trading, we would have had, where did we get a sweep? We would have had a sweep right here. This would have been another entry, so this would have been another win right there. And okay, so we would have only had one more win. But still, that would have been another nice $500. So good way to enter the $500 times 4 accounts and one at double. So that would have been another $2,500. Really nice way to enter the weekend. But I chose to stop at 11 based on the back testing. But just goes to show you, Sniper's a pretty delicious way to trade Forex.